I'm Eric Birch with miningclips.com, and I'm here at the PDAC convention in Toronto, and I'm speaking with Jay Taylor of Jay Taylor's Mining, Energy, and Tech Stocks. Welcome, Jay.
Thank you very much.
Well, we've seen some exuberance in the gold sector recently. We've had some gold prices go up, and certainly that's translated into higher share prices for the majors. Not surprising, but is that sustainable going forward here? We're going to see it fall off. It's a question that nobody can really answer in the short term.
Right.
But one of the fears is the U.S. Fed rate, and perhaps even more alarming, they haven't taken negative interest rates off the table as a financial instrument.
Right.
What are your thoughts on that?
Well, I think those are very gold-friendly policy initiatives if they take place, and I think they probably will, because quite frankly, the Fed and the other central banks don't have any other answers. The only thing they know to do is Keynesian economics, and that means stimulate more with more easy money and more government deficit spending. So they've tried quantitative easing, it isn't working, but as Peter Fisher recently said, he thinks central banks are now in a position of having to do things that are not credible to make themselves seem credible. He says he thinks the central banks basically want to pretend that they still have control. And so the inference was they don't. And I think Wall Street is starting to catch on to the fact that the PhD standard isn't as good as the gold standard perhaps, and we're seeing a rush into gold. So I don't think this is going to be a short-lived thing. If I thought that these policies would work in terms of stimulating the economy, then I would be more bearish on gold. That's not to say we won't have another kick in the teeth, so to speak, with a correction here in the gold price, because it's risen very rapidly. But no, I think this is the real McCoy probably.
Right, and normally gold leads the charge, and when we take a look at silver, it really hasn't kept up. The gold-silver ratio has gone from about 65-1 up into the 80s right now over the last few days. So we really do need a sustained run in gold before we see silver pick up?
Yeah, and I think what you're seeing, the reason for that is because this is really a financial system problem. And silver is more of an industrial metal. So I think if we start to get some inflation in the system, and we might get that if the dollar starts to tank, and I think the dollar will be the last currency to go down in this race to the bottom. And when that happens, I think you're going to start to see silver first, and then probably some of the base metals will start to perform very well, and probably energy as well.
Right. Well, I thank you very much for your comments. And before I let you go, which companies are you looking at right now? What do you find interesting in the space? There's
a lot of things to find interesting. One that I would mention is Balmoral Resources. It's a company that I think, well, they have the base metal deposit that they recently did. That was really by accident. It was a bonus. I really like them as a gold exploration company. A lot of great things going on there in Quebec and over towards the Ontario line near the Detour deposit, and so I think that's a big one. I think it has a chance of, it's just one of many that I follow in my newsletter, but it's one I like a lot.
Well, fantastic. Thank you very much for your time today.
You're welcome.
From miningclips.com, I'm Eric Birch.